Cryptocurrency is like a casino. If you want to live with your pockets full of cash, you need to know the skills you should have, not just be an uninformed gambler. Today, we are not going to dive into any specific project or technical stuff. Instead, I want to share what I've learned in the crypto world over the years and highlight some important skills that you can train on your end too. These skills aren't just useful in crypto to make loads of profits. They can help you with your other investments too, and even in life in general. So, let's get started. First, stick with it long term. Beginners often make the mistake of focusing on short-term gains, which can lead to missing out on valuable opportunities. Whether it's investing or just in life in general, it's all about the long game. For example, when I learned Chinese and started my own social media, both were really tough at first, with little or no success. I couldn't see any progress, even if you launch a business. Don't give up too early. Remember, slow and steady wins the race. People might say, I was lucky, but they don't see the long journey of discipline and perseverance behind my success. And let me tell you that they won't see yours too. But when you get there, you'll know. And that's what matters. The same principle applies to crypto. Chasing short-term success wouldn't have kept me going. Knowing that real benefits take time helped me stick with it. For example, if you analyze the 200-day simple moving average SMA, you can see it's crucial for long-term gains. Historical Bitcoin data shows that the most intense bull markets started after the 200-day moving average broke previous highs. In early November 2020, it went above, how much was it? 10,320, and by mid-April 2021, Bitcoin reached 63,800, a 4.5x increase. You can't see that kind of bullish momentum if you look on the short-term time frame. To put it simply, short-term gains often come down to luck, while long-term gains are about skill and strategy. It's not about the price rising immediately after you buy or falling right after you buy. What matters is finding a good investment and being patient. Even though there are loads of stories of quick gains in crypto, most success requires long-term thinking. Focusing too much on short-term gains can make you anxious and impatient. A great crypto investor looks at the long term and waits for the right opportunity. Not trading is trading too. You are like a hunter waiting for your prey to come. You can't shoot too early or too late. You have to wait for the right moment. Secondly, think for yourself. Many people in crypto tend to be lazy, especially beginners who easily get influenced by market hype. When they see a project being hyped, they think it has a lot of potential without doing any research. This is a big mistake. Top-notch crypto investors have their own strategy and spend time researching projects. It's not about how many times you're right, it's about making the most of your successful trades. If you don't have a strategy or don't know what you're doing, please just don't do anything. Take the SBF incident as an example. In early November 22, FTT was still around $30 or $40, despite the leaked balance sheet of Alameda, showing critical problems. At the time, many influencers continued to support FTX, and many people believed them. I didn't listen to these voices. Instead, I thought about the market impact and decided to sell, and my decision proved right. So, don't blindly follow anyone in crypto. Develop the habit of thinking independently. You might make mistakes, but don't be afraid. This process helps you sharpen your market sense and intuition. Those are valuable skills for life. When you see a project, don't just listen to the hype. Ask yourself what you think. Third, know when to cut your losses and take profits. I've mentioned this in previous videos. The crypto market is full of unstable factors and hidden dangers. Before making any investments, set a bottom line for yourself. If the bottom line holds, keep going. If it breaks, cut your losses immediately. Early on, my stop loss was often 10%. Now, with more funds and liquidity, I've adjusted it to 30%. But you have to have a strategy. What is your strategy? Do you have one? And do you enforce it? Do you understand the profit to loss ratio? How do you adjust the profit part to the stop loss part to increase your gains or reduce your losses? As they say on Wall Street, we have to cut losses and let profits run. And when you let profit run, don't forget to set a trading stop loss too. Time is limited, so I won't go into too much detail, but if you are interested, you can go in depth to understand this concept. You can do your own research on this topic. So yeah, you have to know when to take profit. You've got to have strategy. Know how to identify the trends. Know their strength. If the market's upward trend has lasted long and generated significant gains, it's best to take profits in time. Because the trend will end, it will reverse. On the other hand, the market has many ups and downs, it's volatile. Take OGN, for example, which quickly corrected after a sharp rise. Some smaller trends also have low tolerance for mistakes, but can lead to big trading opportunities. In these cases, it's best to take profits in time to avoid overtrading and greed, of course. Sometimes you can combine stop loss and take profit strategies. In general, the market is volatile by 80% of the time and in a clear trend 20% of the time. For example, if you invest in gold, you could set a stop loss at $3 and a take profit at $15 when it's in the clear trend. Therefore, no matter which plan you choose, with a profit to loss ratio of 3-for-1, you can make a profit as long as you succeed in 3 out of 10 transactions only. A win rate of 30% is enough. That's just math. This is a key difference between experts and beginners in the crypto market. Experts set expectations and avoid high-risk investments, creating strategies that consistently yield returns in the long term. Fourth point, control yourself. Stay rational, stay objective and neutral. If you're always emotional, you'll fall for FOMO and be swayed by others' opinions. You might make impulsive trades only to see the market move against you and miss opportunities. And then, when you know you're wrong, you will still be stubbornly hope for a reversal, leading to a bigger loss. And we can see that often. For example, recently an investor lost 239 SOL in 15-17 minutes because of that. He invested, the price dropped, and sold in panic. If he had stayed calm, he could have turned that loss into a $36,000 profit. Emotional trading won't make you money in the crypto world. Stay calm and don't react to every market fluctuation or rumor. If you can't control yourself, if you can't control your emotions, how can you control your money? Fifth point, keep learning. Yes, keep learning. Cryptocurrency is highly technical. When I first started, I was overwhelmed by the jargon and new technologies. It took me time to understand the market, tools, and methods like trend identification, risk management, and price fluctuations. I also improved the skills I had acquired before through Forex, like technical analysis with charts, moving averages, RSI, MACD, etc. Understanding these technical principles and trading platforms helps you grasp market trends and make solid plans. The crypto industry is always evolving with new projects, tokens, and opportunities. To stay ahead, you need to keep learning and researching always. So, those are the key points I wanted to share today. Remember, long-term persistence, independent thinking, and knowing when to cut losses and take profits are crucial. Thanks for tuning in, and I hope you found this helpful. If you did, don't forget to subscribe and leave a like. And if you also have advice for newbies and for everyone, feel free to share them in the comment section. I'll see you in the next video. Bye bye.